Matt from the Trade Brigade here doing a technical analysis on ticker symbol AAPL for Apple Inc. of course. On the left-hand side we have the daily time frame, and on the right-hand side the 30-minute intraday time frame. First things first, this will of course be an update. We talk about the stock regularly here on the channel. The main thing I want to point out is a little bit of a fake break on the Wednesday session, certainly falling back down into the bull flag consolidation range on today's session. You could start to think of it as a bit of a micro double top here. Of course, we know that the neckline would be the pullback low from in there, so that's 171 even. If that breaks, we're looking at a move into 168, and then I would seriously reconsider the chart when we get there, remembering the importance of that level from all of those touches in there. As long as we build out something like this over time, nothing more than an inverted head and shoulders, break of the neckline here, probably sends us back closer to all-time highs. So that's what I'm thinking about on the daily time frame. Yes, we do have a bearish candle in play here, but we are coming into support from the neckline. So let's take a closer look at the 30-minute time frame. In this time frame, we certainly have a bit of the opposite thing, right? So there's a head and shoulders breaking the neckline, coming back down roughly to the low end of the flag from the daily in here. It's also a little bit concerning in the sense that here was our double bottom, right? There's the neckline of the double bottom. All of this price action acceptance was happening above, even into the early stages of the morning there. We were holding above it, but as we crack down underneath, notice that we're getting some price acceptance down here. If I just take out the Fibonacci's, let's grab the tool. There we go. We'll come in from, let's just go with the high of day down to the low of day. What you'll notice is that the price acceptance is well underneath the 50% and even the 61.8, which is pairing up nicely with that double bottom neckline that we were looking at just off screen there. So to me, a little bit more bearish price acceptance in this zone. I wouldn't be surprised if we get something that looks like this into the remainder of the week, some chop in here, and then next week we really decide based on what the broader marketplace is doing, is it going to move up and out of this consolidation range, or will we ultimately make that move into 168 to retest that critical support? So I think more information is needed. We are sitting at the bottom end of a range. There's an opportunity, yes, for you short-term scalpers to long here, looking for a rotation back up to the top. It's definitely a trade that's viable. Your stop loss would go just underneath. Tight risk, looking for a rotation back up to the top of the range. It's definitely reasonable, but for the longer term moves, the bigger moves, it's got to be a break out of this range right here. So that's all I've got for you inside of Apple. If you enjoyed the video or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.